places that someone can invest their money or even equity if they want returns from real estate without dealing with tenants or property maintenance? Just, especially with COVID, there's a lot of forgiveness that's being offered by the government where some landlords aren't getting paid.
There is risk, of course, with any investment.
Sure.
And especially a newcomer to real estate investing, it can get a little bit it would make you nervous to be needing to rely on a tenant. Are they going to pay or not? So, and at one time in my life, I was actually in that scenario as well, transitioning, moving and whatnot. And I was looking for ways to be able to get exposure to real estate without needing to buy one property and do what we're talking about and go through this process. And now with technology, there's some great options where you can invest in real estate with as little as even $500 or $1,000. You can get access to returns from real estate. And I'm going to give you some websites here that can be looked up. You can plug them into Google or just go online. And these are websites for what are called real estate investment trusts. So these are like a mutual fund of real estate, kind of like a stock, but the ones I'm going to discuss are private, so you can't trade them on the stock market. They're private funds that manage, buy, sell, renovate real estate, commercial and residential real estate. And you can get a piece of those returns. They're investing in office buildings. They're investing in multifamily. Some of these deals are multi-million dollar deals. You may only have $1,000 in, but they're buying a $15 million office building. You can get a piece of that with these strategies and with the different sources I'm going to give you. So one source, and I've invested in all of these myself, I will tell you, one source is Modiv, M-O-D-I-V. It used to be called Rich Uncles. It's a group of very seasoned real estate investors in California. They invest all throughout the country, mainly commercial real estate, and they've averaged, I believe, somewhere around 6 to 8% returns for many, many years. They're very seasoned with this, and you can put in as little as $500 to $1,000 in with them and get access to their portfolio of properties. It's all tracked online. It's easy to track, and your investment, your returns. They direct deposit money into your bank account consistently to get your return. So that's one option. Another is called Diversa Fund, Diversy Fund, diversafund.com. And Diversa Fund is very similar. It's like a mutual fund of real estate. It's a newer company. I think they've been around a year to 2 years. They're doing the same thing where they're buying and renovating and, giving value to real estate. And they also have very good returns on this that you can get involved in, even with just a few $100s. Another great one that I've invested with heavily over the years is Fundrise. Fundrise, fundrise.com. They have a bunch of different mutual funds of real estate. I shouldn't call them mutual funds because that's the wrong word, but they're funds of real estate. Okay. So you can get involved in their West Coast fund, their East Coast fund. They have all these different funds of real estate where they're buying everything from land to sell to developers, to office buildings, to single family homes that they're going to rent out and get rental income. They have a very long track record. Many, many years, I believe, of 7-8% returns. These are the type of returns that most people end up getting on rental properties over the course of time. So to be able to do that and not have the same risk, there is risk, but you're not dealing with tenants, you're not dealing with toilets, you're not dealing with repairs, you're not dealing with the day-to-day collection of rent. It's 100% passive. And two last ones I want to throw out there is realtymogul.com, just the way it sounds, realtymogul.com. They have a few real estate investment trusts that they have on there that are, one of them invests in multifamily properties, like we're talking about, apartment buildings and things of that nature. And the other one invests in all sorts of commercial real estate, office buildings, strip malls, things of that nature. And they have between 4 and 6% returns consistently. Plus, you get a kicker on the back end when they sell properties. Most of these you do when there's profit and exit. So some really good. And the last one I'll give you is fundthatflip.com, fundthatflip.com. So you can actually invest alongside home flippers all over the country, and you can give them as little as a couple $1,000s to get involved and get those returns.
Rob, what are some of the most important things that you need to look at in a good real estate investment?
I think the number one thing is you need to look at what is the income that this property is going to generate. What is the market rent that this property is going to bring in? And then what are the expenses of the property? So we're talking about if you have a mortgage or are going to need to get a mortgage, the debt service on that mortgage, the property taxes, the home insurance. If there's flood insurance, that can be a big piece as well. And then the big piece people miss is you want to budget for maintenance. Things happen with property. You don't just have a house for 20 years, nothing goes wrong. You need to budget sometimes even 10, 15% of the actual income coming in to go towards that maintenance of the property. The older the house is, the more you need to budget for maintenance. And the other thing would be vacancy rates. You can't rent a house 24/7, 365 days a year. What about when one tenant moves out? There may be a month or a couple months before the next one moves in. You're paying the bills during that time. So you want to start out by saying, what are my expenses going to be on this property? And what is the income going to be? And is there a big enough profit margin to make it worth it? Are you really going to go through all of this to make $100 a month?
Of course not.
You know, and especially as prices continue to escalate, is it even worth it? A lot of my real estate investor clients are sitting there getting their capital ready, doing these refinancing strategies, taking the equity out, ready to pounce when the right opportunity comes up.
I totally get it. Got time for maybe one more question before we wrap things up here. Really quickly, at what point do you think someone should really start thinking about building a real estate portfolio?
Like we said at the top of the show, I think getting that first property is key. So you want to have your first property. You want to feel comfortable with home ownership, with paying a mortgage, with maintaining the property taxes, etc. And then you want to look at, once you're at that point, what is it going to take to get to my next property? Like I said, as early as 6 months after you buy that first property, get with an advisor and someone that can show you these strategies. I'm happy to help. And then we can say, here's what needs to be done. Here's what your property needs to appraise for to make this happen. Here's how much you need to pay down the mortgage. Sometimes it may not be possible immediately. We may need to wait a couple of years. Then you want to start saving money towards the down payment to supplement the equity that you're going to get. Nobody ever says I save too much money, especially when it comes to real estate. When you want to do renovations and like we're talking about maintenance and this and that, the more savings you have, the more flexibility you're going to have. What if you find that dream property to invest in and you're $10,000 short in the equity we pulled out of your primary home? That's going to be a tough nut to swallow, but it'll be a lot easier if you have that money saved on your own, separate from the equity. So if you're interested in more passive strategies and you only have a small amount of money, start out with these ideas we were just talking about, the real estate investment trust, the passive income, where you can put in $1,000, a couple $1,000s into these and actually get returns. That'll help you dip your toe in the water before you actually get that next home.
Yeah. Oh, boy. I learned so much. You're so inspiring. You really get everybody pumped up. I know I can certainly tell you how pumped up I get every time. And at the same time, I always get a little regret where, why didn't I start doing this earlier? But, it's good to know that really some of these ideas that you've given, that you've provided here just this morning alone, you can really start implementing at any age. Folks, if you've got a question that you would like asked on these very airwaves to Rob Weinberg, in fact, maybe even next week, simply email us at mortgagemattersradioshow@gmail.com. Again, it's mortgagemattersradioshow@gmail.com. We'll get to your question asked on the air next week. If you would like to do this, check out Rob's website, www.robgw.com. I always start there. Some of my questions get asked automatically. Of course, it also sparks other questions in my mind, but that's okay. That's why I give them a call. Again, it's www.robgw.com. And if you'd like to make an appointment or maybe just ask him a few questions, let's get the ball rolling. Like he said, at least start now, even if you want to do something down the road. It's very easy. Write down this phone number. Could be one of the most significant phone calls you make this year. 860-413-3938. I'll repeat that for you. 860-413-3938. For Rob Weinberg, I'm Gary Byron. Thank you so much for listening to Mortgage Matters Radio Show. Until next Saturday morning, have a good one, everybody. So long.